Morning, everybody. It's the 9th of November. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, good. Thanks, mate. All good. Nice little break yesterday from the embarrassing myself in buying Bitcoin, but yesterday. But yeah, that seems to have like swung completely the other way.
It's had a
And
bit of a slide, isn't it?
yeah, there's obviously a lot of fundamental behind that, which we can dive into a little bit. But yeah, let's get the news headlines out of the way and dive into the charts after that as well.
Let's do that. Okay, latest headlines first up. So the US midterms were kind of front and center yesterday, and they're still in a state of flux. In the US congressional elections, Republicans have secured limited net gains for the House Representatives and remain in a strong position to gain control. The Senate race remains tight, but market expectations have switched overnight to expecting that the Democrats will maintain control. Democrats hold a 48-47 lead with five seats left to be called. There are three very tight races and final results that may not be known for weeks. So it could be that we are in that state of flux, or in that lame duck, as it was referred to yesterday, situation where there'll just be lots of fighting for the next 2 years until one of the parties can gain a majority. In terms of the US consumer confidence, that dipped yesterday. The US IBD consumer confidence index dipped to 40.4 for November from 41.6 in the previous month, and that was below expectations and close to an 11-year low. US yields edged lower, and also equities retreated. The US Treasuries overall have posted limited gains, with a 10-year yield retreating just below the 4.15% level. Equity markets posted net gains on Tuesday, but the US futures edged lower in Asia on Wednesday, with no further buying following the US elections. US dollars dipped again. This is really interesting in the FX space, and we'll come on to the majors very soon. But the dollar dipped again yesterday, with hopes for a shift in the Chinese coronavirus policies and expectations that the Federal Reserve will slow the pace of rate hikes to assess the impact of monetary tightening seen so far. The dollar index dipped to 8-week lows before a limited correction earlier this morning. In terms of what's happening in the UK, the Bank of England chief economist Peel stated that the central bank is not going to move at predefined pace at every meeting, and that there is more to do and rates need to increase further to tighten monetary policy. He added that the bank should not be seen as inflation nutters, and that at some point the wider economy outlook needed to be considered. According to Peel, the economy is entering a recession, and it's difficult to trade. It's a difficult trade-off environment for monetary policy. We also had a warning from the Swiss National Bank yesterday. Their chairman stated on Tuesday that the central bank needs to take determined action to check rising prices. He added that mixed signals on inflation might tempt policymakers to postpone further action until uncertainty has eased, but uncertainty must not be seen as indecision. And then, as Steve mentioned, we had the cryptocurrency slide. The reports that FTX was in serious difficulties and that non-US operations will be taken over by rival Binance triggered a wave of liquidation, with Bitcoin and all major coins sliding in US trading. We saw Bitcoin slump 15% for a limited correction. So pretty savage stuff on the cryptocurrency side of things. So let's get into the charts. I think, Steve, would be the best way to address this and have a
Yeah,
look at the
sure.
impact of all these latest headlines. Okay, what are you going
Yeah,
with first, Steve?
I'm going to go with Bitcoin. Obviously, this is like key that we've broken through the previous swing low from. Oh, I had it highlighted. Yeah, 18th of June swing low. There we go. Had it highlighted on the Alucard. This swing low here. We've reversed. It looked like we were breaking up to the upside, and you know how these markets work. It's sort of like it was a complete head fake, and we've reversed completely. The weekly chart looking very poorly indeed. However, we have recovered from those lows, 17,114. But I think there's potential for further follow through if this story plays out. So this is it on the daily chart. We can see that we had prices managed to sort of like break up from the double bottom formation here. Haven't quite reached the neckline of this double bottom formation, but we only managed like a bit of a 30-40% rally above what we expected from a measured move target. Measured move target was up to this high at 22,780. But this news has like slam dunked Bitcoin right back down. Taking a look at the shorter term time frames, we can see how rapidly this played out. This was really from here, from Monday night at 8 o'clock, and then the sort of like the next 12 hours were very significant indeed. This bar here, Tuesday at 4 o'clock to 10 o'clock, showing that news had broken to the masses. Even on the hourly chart, we got a bit of a spike back higher. To sort of like get out of all those weak shorts before things really kicked off. So yeah, that doesn't look good at all. As I say, support coming in at just above the 17,000 level. My overriding feelings towards Bitcoin hasn't changed. I still feel we're going to see the lower levels. Next stop really for me on the charts would be a move towards about the 14,000 level, maybe a bit of support there, and all the way down we'll find support. So it will be a bit of a quagmire, but that is still going lower in my view. Gold had a really interesting day yesterday, reacted really well to this concern, and maybe we've had a bit further dollar weakness as well. Who knows? Joe will show us. But yeah, we formed this morning doji star formation on the daily chart last Friday. That was confirmed. We had the break higher. Nothing really happened Monday, but Tuesday we had a little bit of a dip. Prices or buyers came in at around 1665, and then the explosion higher. And we can see on the 4-hour chart how this broke through resistance, and that will now turn into support. So let's get a little bit of a blue marker on there. For me, that's where the support comes in. I think on an intraday basis, we're looking to buy a dip. Resistance really up all the way up to 1735. The initial resistance 1730, 1715 was a previous level. I remember all the way back here, we saw that act as support before the spike higher. But yeah, it's all looking quite nice for gold. I'm not going to get completely excited until we take out the 1735 level and close there on a weekly basis.
I'm already excited with that.
Yeah, are you?
Yeah.
You're all in. Yeah,
I'm all in. Yeah. Did you show the daily chart and the break of the channel?
Let me see.
Sorry to put you under pressure there, Steve.
No, that's all right. Yeah, I did have it drawn on. I've got a podcast charts here. It's drawn on my main charts, but not on here.
Look at that.
So that is pretty much what we want to see. Let's try and get that. Take away that fibs and put these fibs in. So even we're looking at 38.2% retracement as the first real solid retracement. That's 1787. So it's still got a way to go. But yeah, for me, this is looking pretty nice as a bottom formation. So we're already $120 high. Oh no, we're not.
We can say 120% in on this.
We're $100 higher than the lows of this move. 1615 is the low. 1715 we're trading. But look at the potential upside. Doesn't really matter if you just missed it. But that's where the risk is, below 1615 now. So that's the level to watch if we do sort of fail on this recovery. But it's looking good. But as I say, 1730 to 35 is key to break and close above there. It could take a few days.
What would you say that would be, Steve? A triple bottom?
Yeah, I mean, effectively it's just a double bottom, but it because it's had 3 points, you know, this is a small double bottom here. Yeah, this point here, that's a small double bottom that potentially targets there, and then it breaks through here. This is the key level to watch. Yeah. And yeah, so we can call it a treble bottom, we can call it what we want, and yeah, it always feels a bit more effective if it's that. After that, we've got like levels to really target, as I say, 38.2% fib, 1787, and the swing high that we got on 10th of August, that was at 1808. And then we run into the sort of like the big band of resistance that we'll have around here. But yeah, very exciting. It's sort of like, it's nice that it's actually kicked into action a little bit. Let's take a look at crude oil. I'll also take a look at nat gas as well, as been requested.
And silver as well, maybe, Steve.
Oh yeah, silver as well. Yeah, let me just jump back to my reliable charts. No, these are better. This is something, I mean, I haven't looked at this chart for probably a couple of weeks now, and this is how it's played out. This is the support that we had from all the way back here. The inverse head and shoulders looking really cool. We're challenging the neckline. For me, 21.42 was the key level. This was the swing high of the 3rd of October. We're above there. So even for a short-term basis, this is really positive. If we do manage to break above this upward sloping neckline, measured move target is at around about $25. So really decent upside potential in silver. For me, this gold and silver rally is really sort of hinging now on that dollar price action, that dollar retracement. Will it continue? So natural gas. Oh, I haven't done oil, but I'll dive into oil. So again, we had this head and shoulders formation. The measured move target for that has played out, so that's done. Thank you very much. You're welcome. Then the rally back, and we've stalled at resistance at 730. So that's key, and that was a gap open that we saw. Prices moved up to 730, and the reversal from there has been quite significant. Still have to see whether, if we go on a shorter term basis, we will have a nice little trend line building here in NatGas. And that will basically be the deciding factor. We've got the horizontal line here, so that just bring in these couple of little supports below. I'll put it there actually. So should find support over the next few hours around about the $6 mark. Below there, it's actually bang on $6, $5.97 to $6. That would be the key support area today. If it holds on the trend line, that would be the first point where you can sort of like think, oh, continue this upward trend. Let's get some longs. Have the stop just below 5.95. It's quite a nice risk reward trade idea. Further upside potential there. Crude oil. The trend line here again. This was put on the charts a few days ago, and we see further the reversal. We've got a nice shooting star candle at the previous swing high, so the nice turnaround. The move lower, we're going to run into support here. This is key. This area around about $87 on the WTI crude oil. On the Brent crude oil, let's redraw this chart here. This is looking really nice indeed. That might be a better line there. 1, 2, 3, 4, 5, even 6 points of contact on this trend line. So this is a key level to watch in the Brent crude oil. Maybe as far as 93.80. Below there, I would start to be concerned about this trend giving up. But at the moment, the trend is your friend. What can you say? Wednesday, we all know what happens on Wednesday. Oil inventory's out later. So we'll get the volatility. Are we going to get that little spike lower, stop people out, and then the continuation higher? It's going to be a tricky one, and obviously that volatility isn't always a technical analyst's friend either. So yeah, I think covered up most of it there. I'll let Joe take over with the FX, and then we can dive into some indices, me or Joe or both. I don't care.
Yeah, we'll have a play around with that in a moment, but let's just focus now on FX. And it really is all about the US dollar at the moment, and all the requests that are coming in for FX markets are all centered around what's happening with this. So for me, I'm going to call it right now. I think the dollar's topped out, and I know we need a bit more confirmation, but what I'm really interested in is this trend line here, which has been in place since February. Obviously, we know prices have been moving very steadily higher. For me, I think we've got a close below the trend line yesterday, and it was a gap below the trend line as well. We have filled that gap, but I think we are forming a top here. I think to confirm this, we need a close below 109.53, which is this black line here, this previous low that was posted on the 27th of October. If we get a close below this, then I think we could be starting to see the beginnings of a turnaround in the US dollar. And in terms of targets on the downside, we've got 38.2% Fibonacci retracement level at 105.13. So that would kind of be my first real target level on the downside. And I think that would just be really a healthy correction in the grand scheme of things. But yeah, I think we're in the process of forming a top here, and we're getting confirming signals on other FX majors to support this as well. Aussie US dollar was one of the markets that we've been asked to take a look at today. What I'm seeing here is a really nice inverse head and shoulders bottom pattern playing out. It hasn't completed yet. I will stress that. It needs to close above 65.22. We had a little bit of a look above it yesterday. Couldn't quite hold on to those gains. But for me, it looks like it's on the front foot. And this candle that we posted on the 4th on Friday, really strong move to the upside. And looks like we could see some follow-through momentum from here. So we're stalling a little bit at this resistance line. But if we get this breakout, then for me, it looks like we're going to see a decent move to the upside. And in terms of measured moves, if we just take a measurement of this potential head and shoulders top pattern, then we're looking for a move up to 68.73. So that would be a really nice bit of upside move on that. In terms of the trend line, let's just see if that marries up somewhere close to the target. Certainly not far away. Obviously, it needs to do a little bit more to reverse this, but this is a really powerful bottom pattern in my eyes. Not completed yet. I can again continue to stress, but I'm happy to kind of go with that. I think it is actually going to break out, but it is highly speculative at this point until we get the confirmation of a close above 65.22. Looking at Euro US dollar, we can see similar kind of pattern to what we see, in fact, the exact same pattern that we see on the dollar index, but in reverse. So here, it looks as though we're forming a bottom pattern. It isn't necessarily a really classic formation. We haven't got a really clean double bottom or inverse head and shoulders, but for me, it does look like it is trying to form some sort of bottom here. A break above 100.93 and a close above that on a daily basis would confirm that. And then I think we can start looking for higher prices. So we've broken out of this channel. We saw a pullback. It was a little bit overextended, but the bulls have come back to the rescue with a really big move higher on Friday. And we've seen prices continue to move up ever since. So 100.94 is level to watch, a break above that level, and we're looking for higher prices. And in terms of the measured move on this, if I was to just speculate on where I think prices could go to, I think we're looking at 106.52 there. Let's just see if that marries up with any fib levels, just to add a further bit of confluence. So we've got to go back some way to those highs that we were posting back in January 21. And let's tag in at the low. So we've got 50%. Let's go for the 38.2. Yeah, pretty much lines up with the 38.2. That's at 106.10. So into this region here would be a really nice correction on Euro US dollar. Yeah, would be a pretty decent risk reward opportunity on that if you were to buy or look for acceptance above this newly formed resistance, and hopefully it will act as support on the reverse side. Let's look at cable. So this is plagued by this downtrend. As we know, it still needs to do a little bit of work to get above this 116.45 level. And if it can, then again, I think we're in the process of confirming a nice bottom here, and we can look for higher prices. Again, not the cleanest of price action. We haven't got any sort of classic formation setting up here, but a confirmation of a higher high and a higher low here would indicate that we are going to see a decent move to the upside on cable as well. And in terms of where we think that could go to, let's just try and find that 38.2 as a starting point anyway. Go from that high that was in February 21 down to those panic lows. We've got 38.2 quite close by actually at 118.40. And then above that, we're looking for the 50% fib level, which lines up nicely with a cluster of price action back within this range here. That's up at 122.98. Let's take a look at New Zealand dollar, US dollar. Again, nothing really clean in terms of price action here or bottom formations, but it is moving steadily to the upside. When we get periods of risk taking, things like New Zealand dollar and Aussie dollar tend to do quite well due to their links with commodities. So this is pushing quite nicely higher and set to continue moving higher, I think. I mean, obviously the overall trend remains bearish and it still needs to do a fair amount of work before we can reverse course on that. But certainly in the short term, there is scope for a correction. This was the really interesting one, a really classic head and shoulders top pattern that was formed on this. It was almost too perfect, really, and they always worry me a little bit. But in this instance, it's played out really nicely. So we've got the left shoulder here, the head, then the right shoulder. Then we saw the break of the neckline on this close below support at 135.29, which we now expect will act as resistance. Prices moved lower yesterday, on the back foot slightly today by 0.06%. Measured move of this head and shoulders target is all the way down here at 130.14. So that's looking really nice. And I would still look to sell into rallies on that one for the time being. Again, let's just bring up some fib levels to see where that 38.2% fib level is, which is our first marker. So that's at 132.24, kind of in the middle point of the breakdown point to the target. The target is very close to the 50% Fibonacci retracement level. So that's looking like some really nice areas to target on the downside there. Now, looking at dollar Swiss, this is the one that's catching my eye today more than any other. Obviously, we've already seen the breakdown in dollar CAD, potentially on the verge of a breakout on both euro dollar and Aussie dollar. But if we look at dollar Swiss, we can see a nice double top formation here. So we've got two highs that were posted, one on the Friday, the 21st of October, another on the 3rd of November. We've got this neckline here at 98.40. At 98.40, we are breaking below that as we speak at the moment. So it needs to hold on to this on a closing basis to confirm it. But for me, it looks like we're in the process of breaking down here. And if we measure the double top and project it lower, we've got a nice target down here at 95.34. So that looks quite nice. Just going by the shorter term fibs here from the low that we posted in August to the top of those double top formations. We're also breaking down through a 38.2. Then we got the 50, 61, and the 78.6 fib level lines up almost spot on with the measured move target of that double top pattern. So it looks like there could be some opportunities in this today as well. Finally, on the majors, let's look at dollar yen. This has broken out of this short-term bullish channel. Still needs to take out this key swing low from the 27th of October. And if it does, then maybe we'll start to see a little bit of a retracement in this as well. As we know, this has been kind of the number one asset really for a while. The move up has been pretty relentless following the break of this wedge back here at the start of the year. And maybe we're about to see some sort of correction take shape on this in the short term, but ideally need to see a break and a close below 145.10. That's it for me on the FX.
Lovely.
Should we take a look at these indices? Should one of us do European, one of us do US?
Or we can, yeah, I don't mind. I've got the US lined up, unless you...
Go on, you do that. I'll do Europe.
Okay. Right, here we go. I'm just going to look at the daily chart really and just see the price action over the last few days. Now, I won't start on Dow. I'll get into Dow, but because it is interesting. I'll start on S&P, which has really had a nice retest of the breakout for the inverse head and shoulders. We brought this formation up a while ago now. We broke through, come back, and we've retested, and it's held really nicely. So the risk is 3,700, a break below there. We're trading at 3,830, so trading nicely above there. But yeah, resistance on the upside coming in at 3,920. So that looks like it's playing out really nicely. The Nasdaq has been the one struggling. I did have the right shoulder potential here, but that hasn't happened. The right shoulder potential could be here. Are we going to see a recovery in the tech sector also? Now, this could play out, but we've got a little bit of a way to go. We've had 3 really positive days of price action, so that's looking good, although the spike high yesterday all the way up to 11,200 failed and pulled back. So that's the initial resistance today. And if we break it down to a shorter term chart, we can let's get rid of this one here. We're still in a bearish channel, obviously on the 4-hour chart, but we may be able to get some sort of Fibonacci lines drawn in from this channel that we've had. So 38.2% fib is the key level. We've already tested it once. We've had the sell-off. We thought there was head and shoulders formation forming. We've broken back quite aggressively above there and looking to take out that channel on its march higher. So overall, quite positive. The Dow, looking at the daily again. that's broken this resistance level, which was pretty key, 32,940. Then we got the spike through that to 33,066. We've taken that out and pushed higher, almost up to the Friday 26th of August highs of 33,344. Not quite. It's pulled back. We're still in this bull mode, and you can see that potentially we've got this inverse head and shoulders also here. Just quickly draw it on here. Been quite a deep head, and it's a double head, so it's quite a complex formation. But is that the sort of formation we're seeing? Are we above the neckline? Yes. Are we above resistance? Yes. Is it going to continue? Tune in tomorrow to find out. What are you seeing on the European indices, Joe?
So the FTSE has been the one that's led the charge, really. Really strong move to the upside. This 6822 level has been absolutely phenomenal, really. All the way back to May 2021, we can see a number of touch points on this. And every time it's got there, and we haven't seen a close below it. We did see a big move to the downside on the 13th. That was the last time we posted the CPI number in the US, which pretty much kind of signified the bottom in the market for the short term. We haven't really retested those levels. And since then, the FTSE's just been on a tear. I don't know if this has been a combination of the dollar pulling back as well, because obviously there's a lot of companies in the UK market that generate revenue in the US dollar. So that may have helped, but it really has outstripped all the other markets on the way up. It's come up just shy of a 78.6% fib level. This big bar that we posted on Friday, prices since then have just been trading within that range ever since. So I don't know if this is running out of a little bit of steam. And obviously what we still have here is a sequence of lower highs that we need to consider as well. So maybe that will continue to be the case for the time being. I was looking at a ratio between the FTSE and the S&P 500, which was quite interesting. Let me just see if I can work that out and get that up on the chart just to show what I'm
I'll just show
looking
you
at
this
here.
quickly as well. This is my FTSE chart, which I haven't looked at for a while, but it shows the inverse head and shoulders playing out lovely. We hit the target on that on Friday. Saw a bit of a reversal there, but it's interesting that FTSE's had this sort of strong rally whilst the dollar has been under pressure.
Yeah.
So
It's very interesting. It's
yeah,
more, I guess, because we've seen a rally in sterling. It may be that more of the domestic stocks, like the banks and house builders and retail stocks and travel and leisure stocks, have all started to move quite nicely to the upside. So that would definitely helped. And the mining stocks have had a bit of a boost as well because of the weaker dollar.
Yeah.
So this is a ratio between the FTSE 100 and the S&P 500. So the fact that it's been moving higher suggests that the FTSE 100 has been outperforming the S&P 500. So while this ratio is moving higher, UK is the preferred index to own. But as we know, over the long term, generally the US markets tend to outperform the UK markets. And as you can see here, throughout this period, really, I can keep scrolling back. The US has just absolutely dominated the UK market for a significant period of time. Maybe we're in the process of forming a bottom here, or maybe this is about to see a bit of a mean reversion. We're into a resistance level here on the ratio. The previous high that we hit was back in the middle of June. We failed to make new highs and close back below it. So I'm wondering whether or not we will see a period of outperformance from the US markets as opposed to the UK markets for a period of time. Just a thought, really.
Yeah.
Let's just take a look at some of the other European markets before we move on. So DAX has broken out of this downtrend resistance. We saw a nice push to the upside, followed by a retest of the broken trend line. And now we're trying to take out this resistance from the 13th of September. Arguably a double bottom in here. I would assume we've hit the target on that because it was only quite a shallow one. But we are trying to take out resistance here, and then we'll be targeting a move up to 13,975. I mean, if we all take into account what's happening on a macro level and with the economies, it doesn't look great. But I think this is more of a play on China maybe at the minute. If they start opening up and relaxing their policy on zero COVID, then that may attract more risk appetite in the market. So that seems to be moving higher quite nicely for now. And Euro Stoxx 50 is a similar kind of setup. We've broken the downtrend here as well. and look to be pushing nicely. We had a double bottom. The target of that double bottom was at 37.50, so we're coming very close to that. And then I think really, if we're going to believe in this, we need to start thinking about trying to take out 38.21. And then really maybe what we're building is a very large bottom pattern. Something like this, potentially. It may be that we get a little bit of a pullback and then eventually a break to the upside. But it's all highly speculative at this point. But at the moment, indices do look like they are attracting attention. Maybe this is just a short covering rally or a bear market rally, which can be quite vicious. So I'm not getting loved up to it just yet, but I'm happy to play it on the long side for the time being, I think.
Nice one.
Okay, quite a lot of chart action today, which is good. Means there's lots to talk about and plenty of opportunities. And it does feel though markets are respecting technical conditions at the moment, which is great for us as analysts because it means we can, tell everybody how right we were on these ideas. So, gun to the head trades. This is where the participants on the video, so whether it be myself, Steve or Taff, we come up with trade ideas live on the stream. All of the ideas must have stops and targets. They're all placed at market. We come up with them very quickly, so it is just a bit of fun. We are just trying to test our skills as analysts and see if we can spot something quite quickly that we hope will play out between now and 9 o'clock UK time when these trade ideas are closed off. Of course, if they hit the stops or the targets in the meantime, then they're closed. But if they don't, then we close them off at 9 o'clock. So we had a couple of trades yesterday, one from myself, one from Taff. So my one was dollar CAD. Steve played it the previous session. It wasn't quite ready. So I jumped on the back of that yesterday. Nice head and shoulders top pattern, and it played out really nicely to the downside. So it didn't quite get to the target. It was looking like it was heading there at one point around sort of 2-3 o'clock in the afternoon. Then we saw a decent reversal, and I think it was 1.5 or 1.63 R on side at 9 o'clock with that one. 1.66 R, sorry. And Taff, he's on a really strong run at the minute.
He didn't nail it again, did he?
He did, yes. He did natural gas. So this was his trade idea yesterday. He sold natural gas at market, looking for that to go down to his first support level, and the lad nailed it. Look at that.
Oh, humdinger.
Yeah, so he got a 2.29 R risk reward return on that one yesterday. So well done to Taff. And yeah, overall, the P&L on our trade ideas is looking pretty nice. So these are the recent trade ideas. A lot of black on the screen there. So over that period there, since the 26th of October, we're up about 15R on these gun to the head ideas.
Nice.
It won't last forever, guys. So don't shoot us when we get one wrong. But yeah, we'll have another go and see what we can do this morning. Have you got one ready, Steve?
Yeah, I think I have actually. I'm just really sort of like basing it on this trend line that I'm seeing in crude oil. Let's bring it up. The trend line, this is the hourly chart. Sorry, this is a 4-hour chart. Why is it a 4-hour chart? This is the one I'm looking for. This is the hourly chart. And we can see this trend support. Does it go all the way back to there? Yeah, I suppose it does, but that's really where the trend support is from back there. But if we're taking it from this this swing low here, this point here, which was the one I was looking at, that's where the trend support comes in. But that also it's the horizontal support that for me is really interesting. This is a key level here at $87 is the one I mentioned this morning on the show. So I'm buying this, and we've got oil inventories out later, so this is where the volatility is going to come from. So this is where I think it's got potential to kick back a bit. So I'm giving it a bit of room on the downside, getting long here. Levels 87.68 to buy, targeting 90.68, which is in front of resistance. The stop is at 86.68, so it's 100 or $1 stop, 100-point stop, targeting 300 points. 3-to-1 risk reward on that.
On it. Good luck to you, Steve. Right, I am having a look. I mean, it's all about the dollar for me, so I'm going to stick to these majors, and I'm eyeing up a trade in dollar Swiss. As I mentioned when I went through the analysis a while ago, looks like it's completing a double top on the daily chart. We've got the top here from the 21st of October, the second one on the 3rd of November. Neckline comes in at 98.40, trading below that now. If we take a look at the intraday charts, we can see that this neckline is being breached, and you can also make out a bearish flag there taking shape. So this is playing out as we speak. Really big move to the downside, so it's going to impact my stop a little bit, but let's go and be quite aggressive with this, shall we? So it's currently trading at 98.28. I'm going to target a move down. The measured move of the flag comes in at 97.64, but the measured move of the head and shoulders comes in down here at 95.35. So let's go with that. In fact, let's make the risk reward. I can give my stop a bit more room now. So I'm going to go with a stop at 98.80, targeting a move down to 95.35, looking for a 5.65 risk reward ratio on that today. So that is my trade, and I'll get this published up right now.
Excellent. Nice one, Joe.
Cool. Right. Okay. Day ahead. So we've got the US EIA crude oil inventory number, which Steve mentioned earlier. That always happens on a Wednesday, so we need to be aware of that. That's at 3:30 UK time. Then tomorrow, we've got the biggie. We've got the US consumer prices. If we look back at what happened this time last month, we saw a really big move to the downside. It looked as though markets were about to start crashing, but then they reversed very sharply and posted some really bullish outside candles at those lows to form a temporary bottom. So maybe we'll get a nicer print on that tomorrow, which will encourage more risk taking. We'll have to wait and see. But then on Friday, we have the UK GDP number as well. So that could impact certainly anything linked to sterling and the UK domestic market. That's it from us, Steve. Hopefully everybody enjoyed it. Thanks for getting involved. If you posted up comments today, we really appreciate it. And hopefully that was valuable for you all. And yeah, best of luck with your trading today.
Cheers all.
Take care.